All right, if you're a taxpayer and you still are paying off student loans, in this video I'm going to walk through 5 tax breaks that you could take advantage of. And at the end of the video, I'm going to show you a 1040, a personal tax return, because I make reference to one of the pages in that return on where you're going to show your tax break. So if you have any questions, let me know. Again, this is geared toward those that are still paying down student loans. Thanks again for watching. Okay, so in this video here, I'm going to go through 5 slides, and I'm going to go through 5 tax breaks for those that are still kind of paying down student loans. So the first one is the student loan interest deduction. So if you're paying down student loans, as you know, there's an interest component to it. So you're allowed to deduct up to $2,500 on that student loan interest. And for those that don't itemize, you can still get this tax benefit. So as a reminder, there's the standard deduction, and this doesn't relate to student loans, but there's the standard deduction and then there's the itemized deduction. I'll show this at the very end of the video. Some people take the standard deduction because that's higher, and other people itemize because that's higher. So those that take the standard deduction, you can still get this benefit here, because typically when people take the standard deduction, there's a limit on additional deductions they can get. So that's that. I'll show you Schedule 1 of the 1040. The 1040 is your personal tax return. Now this deduction here, there's a phase out. So if you're single, your AGI, your adjusted gross income, if it's between this range, you still get the benefit, but if it's beyond that range, you kind of phase out of it. Same if you're married, your adjusted gross income is between here, you get the benefit, or even if it's below there, you get the benefit, but it starts phasing out in this range here, and then once you're beyond the 185 of adjusted gross income, you don't get the credit. So parents who pay the loan on behalf of the child can't take the deduction unless they are liable on the loan, and the child can take the loan interest if they file their own tax returns and the parents don't claim them as the dependent. So that's key there. Next up, loan forgiveness is not taxable. So typically, if you have a loan and it gets forgiven, and whoever kind of gave you the loan, typically banks, and they say, hey, you know what, we're going to forgive the loan. That forgiveness is a taxable event, and you'll get like a form 1099-C, and you get to report that as income on your tax return. But for those student loans that were forgiven between the years of 2021 and 2025, that loan forgiveness is non-taxable. Okay. Now that's at the federal level. There are some states that don't follow this rule, and the states will say, that's actually taxable in the state. So you got to be careful on what states, you report in, because that could be taxable income if you had a student loan that was forgivable. So that's number 2. Number 3 here is 529 accounts. So if you have a 529 plan, you're out of school, you're done with school, and you still have a balance in there, balance meaning that you have some funds that you can use up to $10,000 to pay off that loan. Okay. Now that $10,000 is the lifetime limit. So it's not like every year you can take out $10,000 from your 529 to pay down the student loan. It's only up to $10,000. Now, if you exceed that amount, so if you take money out of your 529 plan to use to pay off this loan, and you go beyond the $10,000, that becomes taxable income, and there's a 10% penalty. So you got to be careful on that. Next is employer assistance. Employers kind of offer employers can offer even more, but up to $55,250 through 2025. Your employer can help you pay down the student loan, and this amount that you get from your employer to kind of pay down the loan is not included on your W-2. It's non-taxable. So that's another thing you may want to look into. And then the final one is this workplace retirement plan. And there's some startups that kind of focus on this. And this is new in 2024, where employers can match your 401k. Instead of it going toward your 401k, go toward paying down your student loan. So just say you get an extra $5,000 of employer match for your 401k. You can use that to pay down your student loan. There's no tax impact here. So that's another one that you want to look into. It's new in 2024. So again, any questions, let me know. Next, the last part of the video here is I'm going to walk through a tax return. I'm just going to highlight some of the things I talked about earlier. Thanks. All right, so here's the 1040. 2023 forms are out. These are still kind of like a draft form. But let me highlight one thing here before I kind of show you the student loan interest. If we go down, this is page 1 of the 1040, and I mentioned adjusted gross income. Okay, so that's that number that I was referring to earlier. So adjusted gross income, also known as AGI. That's line number 11 here. Then you see below that the standard deduction versus itemized. And what I was referring to here is a taxpayer can take one or the other. And obviously they take the higher of the two because that reduces your adjusted gross income. Typically people that own a home, they have mortgage interest, they typically itemize, right? They make charitable donations. That all kind of falls in this bucket. And when they do all that, that's higher than the standard deduction. For those that, rent, they don't, contribute a lot to charity, they'll typically take the standard deduction. Most people take the standard deduction. So I wanted to point that out. But now let's look where the student loan interest is. Okay, so it's on Schedule 1 here. We're going to go on page 2. We're going to keep on scrolling here. Let's see here. Here we go. Line number 21, student loan interest deduction. Okay, and that's where it's going to flow on your 1040. And these are all kind of other deductions here that's going to help reduce your taxable income. So, and that's about $2,500. So, if you have any questions, let me know. Again, the whole purpose of these videos is to kind of educate you on the whole tax side, make sure you're getting all the benefits. And if you want to see additional videos out there, I'll be happy to create them. Thanks.